market update. My name is Alejandro Zambrano and I'm the Chief Market Strategist at Think Markets. Let's take a look at the charts. I'm going to take a bit of a different approach today. We usually look a lot at, we'll start out actually with our PowerPoint slides, but today we will look at the charts. As well, before we start, I need to stress that trading financial markets unfortunately is high risk and we may lose all of our invested money. Moreover, I'm going to share my insights, and I've been trading the markets for many years, but just because I think the market's going to go up or down doesn't mean that that has to happen, because again, we're speculating here, and whatever I'm doing here is not advice, it's educational content and market commentary. If you accept that, keep on watching. All right, good. So what's the big news? What's the big news? I think you already know what the big news is. The big news is that the U.S. has imposed tariffs on Canada and Mexico, 25% on things they want to sell to the U.S. Moreover, Canada has already retaliated. So they're going to phase in tariffs as well, equaling 25%. But it's not going to impact everything. It's going to impact about 43% of the things that Canada exports to the US, okay? So not as severe. Mexico as well, they haven't really told us exactly yet what they're gonna do, but they're probably gonna be more targeted. Now, what's the impact of this? Well, we have already seen the Canadian dollar. We talked about it in TradingView via the Think Markets account, but also in different articles. When we said a break to 145 could lift the price towards 147.55. But this was a tricky one, really. Like if one would have traded here, if you had a stop loss too tight, it would have been stopped out. If you put your stop loss further away, congratulations, we hit that take profit level and we're up here. Now, what could happen next? Is this it? It depends, really. It depends. Like if we look at stock markets, I want to show you the Nasdaq 100. So this is the Nasdaq 100. It only dropped with about 2.5%. Okay, so it's not a lot. Okay, from here to here, 2.5%. And technically, we're still in an uptrend. So what the Nasdaq 100 is telling us, but also the S&P 500, is that we're still in an uptrend. Okay, we're still in an uptrend. And I think the reason why they're saying this is because the stock market traders, either they're waiting for the cash open, you know, that's going to happen in a couple of hours to offload. Alternatively, they're thinking, oh, this is going to be reversed really quickly. And it is true. If it is reversed really quickly, then yeah, we're probably going to go up. What is the likelihood of that's going to happen? Well, it depends really. It's a bit of a difficult situation because you see the trade agreement between Canada and the US right now, and also Mexico, is the agreement that that Trump did when he was in power last time. Okay? So what else does he want? Well, today he wants to stop illegal migration and he wants to stop drugs coming into the country. Of course, it's going to take very long time to try to build a wall, but he effectively doesn't just want to build his own wall. I would say he would like to see Canada and Mexico also build a wall. So there's a fence on two sides. Does that make sense? So the Canadians are responsible for blocking and the Americans as well. I mean, I think that's what they're looking for. And I think that is possible to fix. It's going to take time to build a wall, of course, but it's possible to do it with military, UAV drones, whatnot, right? So there is a possibility. And if that would happen, if that happens quickly, and if that's the only problem, then yeah, you know, we're probably going to push higher here in the Nasdaq 100, and then you have things like the dollar CAD and Mexican peso realistically coming back towards the breakup point. But will this happen quickly? I'm not sure. I think they're very far from each other because the US and Trump said via Truth Social, you know, that not only that, I think they even said it on a note in the White House that, you know, Mexico is working with the cartel though they have infiltrated government. And I think the Canadians as well, they feel a little bit lost because the Canadians, at least if you look what's been said on the Canadian news, there's not too much discussion about drug production and illegal migration. It's more about the fact that they feel unfairly treated. So, you know, if Canadians don't even think there's a problem there, then there's going to be an issue. So yeah, let's summarize then. If this gets solved quickly, we go back to those breakup points. If it takes longer time, which I suspect it will do, then it's going to get worse. As well, if they go crazy and put tariffs on the EU within the next 3 weeks, then that's going to also be very bad. Because about 90 years ago, 95 years ago to be exact, the US introduced similar tariffs, but a bit different, a bit more harsher back then. But back then, for your information, trade dropped with 60%. So US exports dropped with 60%, okay? What more, the stock market dropped with 89%. Now, in the 1920s, the stock market was on its way up, okay? And then it needed to come down anyway because there was too much speculation. But say we only take half of that, we drop 50%. 50% is still quite a lot. Or what if we take even half of that, 25%? Well, 25% is still a lot. So with that in mind, things can get ugly quite quickly, especially if this is prolonged. Canada did an analysis, and they said that if Canada retaliates, which it did, then the US economy would lose 1.6% of GDP. That's the US economy. For Canada, they're going to lose 2.8 or so. So it's going to be even worse for Canada for doing this. And Yale as well, Yale University, they did an analysis, and implementing this is going to cost US households about $1,250 per year. Yeah, so it looks to me, inflation up, stock market's down, GDP down, and just problems unless this is fixed ASAP. So with that in mind, my strategy would be, for example, in dollar CAD, to keep on buying dips. So for possibly buying dips from sort of 145.67, 146, and as long as you trade above the breakup points here, I would be bullish. And in terms of the Canadian dollar on its own, like if I show you a monthly chart, we just triggered or breached above these points here. So they suggest a push up to 173. As well, when tariffs are implemented, the currency, for example, if the US implements 20% tariffs, dollar CAD would anticipate it to go up with maybe 10% or 5%, okay, to sort of compensate for the tariffs. That as well makes a lot of sense, and that's something that not only I knew, but Yale University as well put a report on that. So overall, it's looking that we can head to the upside. Now, we're going to go all the way up to 173. I'm not sure, but maybe 160. So the highs from March 2002. Yeah, that could easily happen based on the technicals, based on the fundamentals. So I think, yeah, this is where I would focus on going forward, correction and then push to the upside. One could as well trade the same thing in via dollar Mexican peso. The charts look the same. So let me see if I cannot even find it now. Let's search for it then. So here we have an ascending triangle pattern that was triggered on the news. If we have a correction back towards 2091 and in worst case 2080, I think here people are going to be very keen on buying. So let it go down, that's fine. But then we want it to push up again. As long as you trade, I would say above 2070, we're going to go up maybe to 20.82 per the pattern. In terms of the Euro USD, we went down. We've been talking about this going down for a while. And it actually did that at the end. Obviously, in the short term, the trend was bullish, but now we're trading firmly below that. If we go up towards, I would say, 103.37, I think people are going to sell, then target the lows. And I think we're going to be at parity. I think it makes a lot of sense because the Eurozone is going to be next. The only way I can see this not happening is if there is a prolonged trade war between US and Canada, Mexico, and China. And suddenly people say, well, I need to buy a new car. I can either buy a very nice Mercedes or I can buy like a Ford car. If the prices are similar, you would go for the higher quality, right? So maybe that could happen, and you have Siemens and Philips, and you have sort of European brands that could potentially benefit from this. So that could happen if the trade war prolongs, and that maybe could get the Euro USD to push to the upside, but I don't see that right now. In terms of the Nasdaq 100, so it's perfectly fine from a technical point of view to buy at these lows and be bullish about 220.50. It's just that me personally, I think problems are not going to go away as easily, which means I think we will trade below this level at one point, and then we can have a more typical decline, which will be at least 5, maybe 10%, which would at that case take us down to 19,343. So break here, down here, and then maybe down here. In terms of crypto and Bitcoin, so altcoins has been destroyed. This is ADA. So ADA from its Saturday levels, which are up here, down with 46%. Sorry. But even here on today, it was down with 40%. I don't blame people. I mean, I would have bought here, but I was sleeping at the time, so I missed this. It's nothing wrong buying these dips and then looking for, you're looking here and say, okay, I'll risk 30%, but realistically, it's going to go up to 42. No, that's perfectly fine. But I think here, it's too early. Like, I think it's going to go up a bit more and then maybe down and then up. Maybe up. The reason to this to go up is we need to have some positive news, and I don't really see that happening just yet. So yeah, that's for it. And the big problem here with Bitcoin is this. So we're stuck in a rectangle. So imagine if we break below 89. If we break here from per rectangle perspective, we can go down to 70. So maybe this can go down to 80, I think. Maybe 76. I think that makes a lot of sense. So break selling here for this to go down. The alternative again is to buy here for this to go upwards. But again, with the fundamentals, I wouldn't really go out and buy. How about gold? So gold was a bit tricky, so we got stopped out on the levels we talked about last week. But I think just in general, I mean, this low here from Monday last week, that is sort of the real trend defining level. And as long as trade above that level, I think people are gonna maybe buy dips. And I think this is gonna go to about 3K on all the problems in the world. Oil, this is Brent crude. Last week we said look to sell. I think we did hit the sell. Yeah, we did hit the sell. And then we went down. We reached targets, but it's a bit of a tricky situation here. Like realistically, given the problems in the world, I would say that this is gonna go down. GDP growth is gonna taper off if these tariffs persist for too long. So I would continue to be bearish. And I think if we do have a correction to maybe 77, I think people are going to use this as an opportunity to sell. The target 74.88, and then maybe even lower levels. Remember that Trump wants to drill more. The problem though is it takes time to drill. You can't really open up a rig from one day to another. Now this is interesting as well, which I think would be really bad if the Canadians and the North Americans or the U.S. cannot agree. I don't say North Americans because they're all North Americans, but you know what I'm saying. If they would not come to an agreement, what's going to happen? There could be a situation where Canada says we're not going to give you natural gas and we're not going to give you oil. And there is no proper pipelines, as far as I understand, to send oil from the south of the U.S. to the north of the U.S., which means that it would be a very difficult time for the northern states with very high inflation and the demand for oil from say Venezuela and other places to feed the U.S. industrial machine could potentially lift prices because of these uncertainties. But we're not there yet. And that's it. I think we covered everything. If you have any questions, just leave them in the chat. If not, we are going to wrap things up. And I want to thank you so much for, let me just load Think Markets YouTube page. Hi Nathan, thank you so much for joining us today. It's good to see someone in the chat. We usually don't see so many people in the chat.
Hi
But yeah, it's
Nathan,
amazing.
thank you so much for joining us today.
Appreciate it.
It's good to see someone in the chat. We usually don't see so many
We got a
people in the
question here.
chat.
Do you use
Hi.
fundamental? I actually bought here on the breakout and it was looking really good for a while. But then I just had my stop loss a bit too tight, so I had it here at 43. Sorry, I had it here at 44-ish, 44.20-ish. So then the market moved down because I knew this was going to happen, but the key point many times is that we want to improve the risk to reward ratio. I mean, that's super important. So, for example, to give you a bit of an idea of an alternative which I didn't trade, or which I should have traded, but I didn't, was this. So this was Ethereum. So Ethereum, you see, we were stuck in a descending triangle, okay? Stuck like this in a descending triangle. So apparently it's echoing. Okay, sorry about that. All right, is it still echoing? I'm gonna switch off here. I think I know what's happening. There we go. I think there should be no echoing now. So yeah, what I wanted to say is that, perfect, thank you Nathan. So what I wanted to do here, but I didn't, is Ethereum descending triangle, a very nice descending triangle with 1, 2, 3, 4 touch points. You can almost call it 5 touch points. And then we have the negativity that is happening in the market. So I was looking at Bitcoin and I said, oh, Bitcoin is sort of here in the middle, it can go down more. So that could give legs to a down move here in Ethereum. Plus we have all this negative news coming out. But you know what, I didn't do it. I don't regret it, but I didn't do it. So here, let me actually show you. I'm gonna load another set of charts. Yeah, I don't have it here either. But I think the market was down maybe 3.5% or so. But this is what I was looking at. So I was looking to short sell with a stop loss just above. I didn't think we were gonna go this much, really. I didn't think so. But you can see here, in the best of worlds, it would have been a 8.27 risk reward ratio. And if it would have been closed out now, it would have been a 4 times risk reward ratio. That would have been really good. But I would realistically have closed out way earlier than that. So yeah, that's how I trade, fundamentals and technicals. And I find that makes a lot of sense, because sometimes if you only I mean, it's always good to know what's happening in the background. The problem with the fundamentals is that sometimes you just enter too late, or you don't realize something is wrong. Okay, so for example, maybe right now is the pain point. Maybe right now is the worst that's going to be in the market, because maybe right now there's negotiations happening between the U.S. and Canada. So what could happen is that, and Mexico. So what could happen is that they all agree, okay, we're going to put soldiers, we're going to put drones and tanks, whatever they want to please Trump. They're going to be someone every 20th meter or whatever. So nobody's going to be able to cross, okay, along the borders. So that could be resolved. But then from a fundamental point of view, we need to think realistically, will it be resolved? I don't think so, not that quickly. So then we bear that in mind, and then when we're looking at trade ideas, we look at, okay, how can we trade where this fundamental view and technicals make sense? So right now in gold, you can trade that because it makes sense. You want to buy dips in dollar CAD and dollar Mexican pesos. Well, it makes sense to go long, so short those currency pairs and buy the dollar. That makes a lot of sense. If you wanted to, yeah, so that's how I look at it, and it served me really well. So that doesn't always work, but it served me really well. Another thing as well, it's important to sort of see where's my edge. You know, is my edge to trade oil, where there's where it's a little bit of a tricky situation, or can I buy something and trade something easier, like gold and Euro USD and dollar CAD and dollar Mexican peso. And that's it. All right, thank you so much for joining me all. And okay, so let's see here. Nathan says, so I was trade Euro USD. What should I focus on before trading? So you need to have some sort of trading system. So what we're doing here, what I offered to you is that we're in a downtrend, right? So the first thing I'm trying to do is try to figure out where is the trend defining level, where's the level that breaches this trend. So we know now that that's actually 105.39, which is the high here, okay? But given all the problems in the world, we probably don't need that as the trend defining level. We can probably work with something closer, which is 104.47, sorry, 104.74, which is this level here. So from that perspective, we can reduce the stop a bit, because it's unrealistic that we're gonna go all the way up here, giving everything in the world. So from a trend perspective, we are somewhere here, right? We're here around the lows. So if you imagine a channel which goes like this, then we don't really want to be short selling near the lower end of the channel. We want to be doing that at a higher level. Now this might go straight down. The downtrend may pick up in pace, but but given the information we have now, we cannot take that trade unless we're extremely convinced about something. So the idea is here, where is this not oversold per the trend? So that is what I mentioned before, that around sort of here, around 03.44 or so, the situation is not as oversold. So now suddenly you have a risk of possibly 139 pips, and then if we go down, you can make it 200 and something. So the risk reward ratio is 1.6. So this is one way of looking at it. And say you want to hold it for longer, you think we're going to go to parity, which I think makes a lot of sense, and I've been saying that since we were trading up here. Then your risk reward ratio is 2.34. Now that's one option. So this is where you have to be more open to just not trading one market. So here, for example, is gold. So with gold and everything, people wanted to buy here, and if we go down here, we can buy again here. So here we may need to make a call. Are we going to work with this as a stop, last month is low, or we're going to work with this as a stop? Probably, to be on the safe side, we're looking at this. So here, say we go up to 3K, which makes a lot of sense, then your risk to reward ratio is 5. So where is the better return versus our risk? Is in gold. Then I will buy gold. Now what I just said works really good for me, because I like to hold the position for a couple of days to maybe 2 weeks, 3 weeks. Okay, that works really good for me, because I have a busy life outside of this, outside of trading. And I like this because it gives time for my positions to grow. And if I'm enter wrong, I give it time to go up higher in this case. But the same ideas can be used on shorter time frames, small time frames, like 30 minutes, for example. So you would look at support and resistance from the short term and then apply the same idea. Where do I get a good risk to reward ratio? Okay, we're gonna wrap up now. I want to thank you all for joining. Nathan, I really appreciate the questions. Hope to see you next week. We'll be here at the same time next week to cover the markets. Thanks everyone, and happy trading.